All right, well, welcome back to another weekly edition of Stock Market Mutterings for the week of August 5th. Hope everybody's doing well. If you need some help with your trading, visit thelincolnlist.com, click on the Trade Room tab, start to trade with us live. I'm going to do my best to try to find you some great setups. It's been a while since I've shown the grizzled mug, but it's good. It's good to be back on film. I know I've been doing a couple of these, been kind of busy. Good month last month, though. Really good month. Good start to this month. So again, if you need help, you know where we're at. Let's talk about the SPY, Mr. SPY, as we always do. Now, it feels like you're getting a mixed bag. Some days are bearish, some days are bullish, some days are choppy, some are sloppy. It's just kind of going back and forth. But when you block out the noise, the market's still trying to get back to all-time highs. Now, the emphasis a couple of weeks ago was on 280. We broke 280, and I kind of thought once that was done, it would just go straight back to January highs, all-time highs. No, didn't do it. It actually sold back off. We had a little bit of tariff heat coming in there and a few other things. We had some earnings on the big FANG names. Kind of put everybody in going different directions here. But by the time the week was over, it's just right back up there where it was. I'm going to open up the chart just a little bit for everyone so you can see. I mean, you're just real close. I think if you go back to 284, you go to 284.30s, excuse me, then you're probably going to look at, yes, that all-time highs is going to get done. The thing is, it's still, when we go all the way back to April here, look at the chart on the bottom, April, where we're kind of washed out there. We've been making higher lows the whole way through. So that's one thing to look at there, just something to pay attention to if you're looking at the market overall. We get through that. Looks like we might end up going back up there towards those all-time highs. That would be the only resistance left in this chart. But I want to focus on some of these stocks. Again, the stocks have been different because, like I said, the FANG names, you had poor outings for Facebook and Netflix, good ones for Google, kind of like we don't know what's going on with Amazon, and a monster blowout from Apple. And maybe you can kind of look at Apple and say that was the one that turned this market, saved the market, threw a bone at it. Who knows if that's right or wrong, but monster earnings from them, and that stock just went nuts. So the first thing I want to look at is some of these earnings plays have really been big winners. And one of the things that we like to do in our room is take these earnings winner and get a good gap and go strategy on them. This is a good way to make some money. But sometimes what happens is these things rip for 3 or 4 days. A good case is like PayC, P-A-Y-C, just monster moves. So now you've got this soda, which is something that we were long a little bit earlier. Now I'm kind of thinking that maybe take a shot at shorting this here. Now, there's a couple of different ways that you may want to look at doing something like that. If it's parabolic, if you don't know what parabolic is, take a look at today. If you get a monstrous candle that begins the day, there's usually a lot of emotion in candles like that, and you can see it sold right off after that. Ultimately, it came back up, yes, but for that short period of time, you got a pretty good move. You got a 115 to almost 118, and then a complete retracement of the whole thing that we call an A-frame. And I like these kinds of trades. So I think if you follow through Monday morning with a big old para that gets you somewhere over 120, that would be my set. I would try that. On the flip side, I think if you got a fade or a dump or a really big pull, a big panic pull or something like that to the other direction, it would be a long. But I'm kind of stalking this one here just a little bit short. It's got to be over 120. It's got to have the right kind of setup. But after 3 strong days coming out from earnings from 80 to almost 120, I think we got to start looking at possibly trying to take advantage of that. Now, another one here, a recent earnings winner, is this EXPE. Now, unlike a lot of them, this one has not held its gains. In fact, it looks like it's pulling back pretty hard into its moving average. Let me open this chart up here. It's a little small. There you go. Just a pretty big fade on this from 138 all the way down to 131s here over the last few days. Now, if you look closely, the 10 moving average right here on the daily chart, got a couple of back-to-back plays here. It looks like it's making the attempt to kind of wash out. So wash out, guys, is when you got to start going down and it just washes out. Like water running down the valley, washes out into the pond. You're kind of washing out right there. What you need here is a confirmation day that takes out one of these last previous candles. So for me, if you look at the top of this candle here from 8 to August 2nd, that'd be about, I won't give you to the penny, but let's say 133.50. You get a break above 133.50, you get a chance to take out a couple of these days. You should get a nice little curl off that 10 moving average. And a stock that possibly could work its way back up to high day. Again, needs some work, May not be something that plays out at all, maybe a Tuesday, Wednesday, Thursday thing, but just keep it on there. I think if you get back up above that level, you're going to see a grind on that one. Now, the next one we're going to talk about is probably one of the better trading stocks, period. That's got to be this damn Tesla. I mean, I don't know. I'm going to have to say that over the 20 years I've been in the trading business, I don't know if I've ever seen anything like this. I don't think I have. I know I've seen some crazy stuff like KBIO or VLTC. We had rare earths. We had all kinds of wacko stuff go on, but I don't know if there's ever been a more emotional tribe of people. It's sort of like lines are divided. You're either Tesla bull or a Tesla bear. And it's like they draw lines. It's like if they were family members, you wouldn't even be able to eat at the same dinner table. It's like never have I seen a stock that carries so much emotional weight and so much hatred by so many people and so much love by others. And of course, you've got a very eccentric CEO, one of a kind there. I mean, just a wild stock. Now, that doesn't matter to me because I'm not an investor. Right? I don't care whether they make money or not, or whether it makes sense or not. That's not really what I'm in this for. I'm just trading. I'm just trading the way this thing moves. And I got to say that, you know, this thing was just a beast to play. I think you got some more upside in it because, you know, it just feels like every time you want to write this thing off, there's a lifeline tossed in it. The thing is, it can go either way. I mean, I really don't even have a level to give you. It's just like, watch this thing. At some point, it'll drop $8 and then it'll rip $8 the other way. It's one of the best two-way players. I think if you get a little bit under to the Friday lows of 344, you might see a little bit of back testing, about 50% of this big candle. I don't expect, I wouldn't write it off. I don't expect, but I wouldn't say it wouldn't happen, that it would give all of that back. I mean, I could literally see Tesla fall into $300 and then the next day it'd be 380. Who knows? Amazing stock. Just an amazing stock. Just always keep it on your list if you're a trader. And then RGNX, which is kind of like the thoughts I have with, what is the stock I was looking at? EXPE. That's the one I was thinking. I was thinking EXPE. Here I've got the alert already set for you. 72.35. Same thing. Stock that's been on a pretty good fade, over 80, down into the 60s now. And you're washing out. And you spent probably 4 or 5 days down there. If you look at the red line just below, you got a nice little bounce area off that 50 moving average. Caution you though, you see you got earnings coming up here. Don't trade that through earnings. You'll have a couple of days at the beginning of the week to possibly trade this thing if it makes that range breaks, get a pre-earnings run. Other than that, don't mess around with it. Don't trade it through earnings. That's the wild card. It could be good, could be bad. And you don't need that headache. You don't need it. So in a recap, here's what I'm thinking. Doesn't matter what you're really trading. The market's still trying to go higher. And you got all kinds of stuff that keeps getting thrown at it here. You got tariff news that can come out at any time. We've seen some pretty abrupt. And like I said, even though the market, when you block out the noise, it looks like it's going up. That's what I want you to focus on, because you look at some of the intraday action is just ugly. Like here's this little block right here I'm going to show you. This is the NQs, the QQQs, the NASDAQ. I mean, look at this little section right here. Lord, I mean, look at the schizophrenic back and forth nature of the first hour or two of trading. And you've seen the market like that. First hour or two is throwing out a lot of wacky signals. So I think if you're a day trader and you're looking to get that money daily, you got to be hitting and run. That's what you got to do right now, because you know some of this stuff rips. And then it goes back the other way and settles in. It's back and forth like that. So still a little shaky stuff, but I'm cool with that. So anyway, if you guys need help, you know where I'm at. Visit thelincolnlist.com. Until next week's Market Mutterings, trade well. Take care.